Yo, what's going on, guys? Welcome back to the fourth episode of the Smart Money Show. In today's episode, we're going to discuss the big topic, prop firm trading. And today what we're going to do is we're going to compare prop firm trading with retail trading, basically trading with your own account, and which option is best for you, because as you guys know, there's obviously going to be advantages and disadvantages for each. So we start off, obviously, as you guys know, prop firm trading is when you apply with a prop firm, you complete a challenge, basically a little test to prove that you guys can trade. Usually it's consistent of 3 different steps. So basically you sign up, you do the challenge. First of all, there's a certain set target that you have to reach, so a profit target, and you also have to stay within the constraints of certain rules that they set for you. Upon passing that in a certain amount of time, usually 30 days, you move on to the verification, which is kind of like another step to make sure that the challenge wasn't just complete luck. And then finally, you move on to being funded, where you trade their account, they give you a certain percentage of money, and yeah, it just keeps going month in, month out, until eventually you either just stop trading with them. A lot of people, they just end up blowing their account, so they might be able to only just keep their account for like a month or 2 and they end up blowing it. Or you just have enough of them, you've made enough profit with them and you move on and trading for your own. So obviously the first factor is, do you have enough money? So before hopping into prop firm trade or trading for your own, do you have enough money? Because as you guys know, you can't really trade with, contrary to popular belief anyways, you can't really trade with 500 USD. You can't trade with 1,000. You can't trade with 5,000. Even 10K, I think, is a very small amount. So the potential profit there is very low. And that's kind of a whole different episode that we can even discuss, because it's a really big topic, just the amount that you should be starting with. Okay. But for simple reasons, 5,000, even 10K, it's just not enough to be kind of paying yourself, especially if you're trying to do this professionally and it's not something that's on the side. Professionally, that's not going to be enough to pay the bills. Okay. Second of all, you can only make so much with such low amounts. So for example, if you're trading on a 5K account and you're only risking 1%, that means you can only risk 50 euros. Okay, so you can only risk 50 euros, which means that you're going to be trading very small lots. And even the motivation there from trading these small lots, you're just not motivated enough. You get kind of greedy, you kind of want more. So there's, as I said, there's so much more different things when it comes to trading a lower account. And that's why a lot of people, they don't kind of succeed trading these small accounts. So if you don't have, we're talking 50K, 100K to put into your trading, then clearly prop firm trading is the best answer for you. Now, as we go into prop firm trading, there's kind of disadvantages and disadvantages. And as I'm a positive person, we're going to kind of start with the advantages that I personally think. So obviously, one of the first things with prop firm trading is that you get access to a large amount of money. And it's very low barrier to entry as well. Anyone can get this amount of money, literally anyone. And it's something that's kind of become very popular in recent years, whereas before it wasn't really that popular. And low barrier to entry allows literally anyone to just hop in, complete the challenge. Literally, I'm seeing 16-year-olds getting funded, getting paid out 10K a month. So it's very simple. So you literally just hop on, you sign up, you complete your challenge, you get funded, you complete your verification, and there you go, you're making money. So as I said, low barrier to entry is probably one of the biggest advantages when it comes to prop firm trading. Another great thing that I found with prop firm trading is that there are rules in place. Now, this can kind of play to your advantage and it can also kind of go against you. So it really depends the way you look at it. Having rules in place, especially as a bit of a more unexperienced trader, is very good, because you kind of always have that accountability to kind of not lose your account or to make a lot of mistakes. For example, some of the challenges, they have like a 5% daily max loss. Now, with that being said, when you have that 5% daily max loss, you kind of have something there like actually stopping you, physically stopping you from kind of trading. Whereas if you kind of were just kind of trading your own account and you had a really rough day, then you might just end up losing 10%, 20%, and you still get to keep your account. But knowing that 5%, if you hit that max daily loss and you lose 5% in one day, you're going to lose your account. That's something that's kind of holding you accountable and stopping you from losing that account and stopping you from kind of going into more of those bad trades, revenge trading, over leveraging, all of that stuff. So having rules in place is really, really good because it kind of holds you accountable, and it kind of nearly helps you shape your own trading plan, because when you have certain rules where you're only allowed certain risk, okay, you have set leverage already there for you, you already know how much you kind of have to target, etc., that kind of helps you shape your trading plan. So it's kind of all set out for you, and I believe for inexperienced traders that can be a huge learning curve. And I mean, like, probably the best learning that you can get is definitely with these prop firms, and that's from a personal perspective, because there's just so much rules, very strict trading. So when you're kind of put through strict trading and you're trading that for months, you kind of build a lot of good habits, and that will be able to translate eventually when you move on to your own account once you make enough profits. So with me, with these prop firms, with these kind of funded challenges, etc., for me, I personally look at it as a means of building capital in order to then eventually trade for yourself. Because when we kind of go on to the disadvantages, these can disappear anytime. Now we look at a couple, I'm not even going to name names, but we look at certain prop firms that were there, you know, like a lot of people were trading with them. For example, there was one, a lot of people were trading with it, and then boom, eventually they can't handle the amount of people, they can't pay out their people. So what happens? Their whole system kind of crumbles. And what happens then? A lot of people, they lose their account, all that hard-earned money, they only get like 25% of it paid, stuff like that. So it caused massive uproar, and yeah, that whole thing had to eventually close down. So you don't know when these prop firms could potentially disappear, and that's something that is kind of scary. So for me, the way I approach it is, when you're trading this, whatever it is, make your 50k, make your 100k, and you put this money onto the side. Okay, you put this money onto the side, and then you eventually are able to trade with it using your own broker, using your own account. And obviously you're going to be making 100% of the profits, because you guys realize that the way they make their profits is in two different ways. So obviously they make their profit from you guys trading, and they take the 30%, 20%, 40%, whatever it is, whatever the profit share agreement is. And a lot of the money is to be made from a lot of failed challenges. So obviously you have to pay a certain fee in order to get access to the challenge. And a lot of people, you'd be surprised, fail. Even people that pass end up losing a lot of people end up losing their account in literally the first month of being funded. So you can only imagine the amount of money that they're making as well from the sign up fees. Okay. So personally, I believe that just having that uncertainty of them disappear can be a huge disadvantage, as well as that not having 100% of your profits. Okay, it's there. Obviously, they're going to have to be paid somehow. As it is, it's a pretty good deal. You're getting access to their funding, you're getting access to their money, and you're getting paid for that. So for me, not having 100% profits, like at the end of the day, there's always this saying where a beggar can not be a chooser. Not to say that we're beggars in this instance, but obviously they have to be paid in some sort of way. And the fact that you're getting literally 100k, 200k, 300k in funding just by completing a couple of steps, okay, is a lot of risk on their side as well. But obviously they have their own systems of making sure that that risk is mitigated. Okay, so that's probably one of the smaller disadvantages that I kind of see, as well as that tough rules that go against your plan. So with all of these rules that they set, a lot of time it's very difficult. So for example, a few off the top of my head, a lot of these firms, they kind of have low leveraging. And I'm talking about some of them, I've seen them leverage for only 1 to 5, 1 to 3, which is very low. And specifically, these ones are the ones where you don't have to complete a challenge. There's this kind of other system where literally you pay straight away, you're getting that funded live account. Now, the trick behind it here is, you might think that, yeah, you're not completing a challenge and you're getting access to the funded live account straight away. Well, that's not really the case. Okay, that's not really the case. In fact, all the risk usually is very covered. Remember, all these things, they're calculated. They're not going to be taking unnecessary risks, and they're protecting themselves. Like, they're really protecting themselves by having that low risk. So they might be saying you're getting access to 50k in funding, but realistically they're only allowing you to trade 0.5. They're only allowing you to trade a 0.5 lot size. So realistically it might look like a 50k account, but at the end of the day, that's all numbers, because you're actually not able to trade that whole 50k. So that's another disadvantage. Be able to understand what the leverage is, what their system is built on, understand their rules, okay? if that can actually sit in with your plan or not, because I know some of them you can't even hold over the weekend. So if you're a swing trader, straight away, that kind of works against you. If you're trading the smaller time frames and you're going for those high risk reward setups, obviously you need a lot of leverage because you want to be able to use higher lot sizes. Meaning that with a lot of these firms, you can't be one of them smart money traders that are trading on the 1 minute time frame and trying to get them 2 pip stop losses, because you simply won't have leverage to be able to do that. So for me, I personally think that that's probably a very, very big disadvantage. But of course, there are very, very good ones out there. You just have to be able to do your research to filter through the best ones, because a lot of people, they ask me, which is the best prop firm? That's a very, very difficult question to ask, because at the end of the day, it kind of all boils down to your trading plan, and each different prop firm, each different challenge will suit a different person's type of need. There's not one answer for everyone. So at the end of the day, as I said, you go do your own research and see which prop firm, which rules, which ethics, whatever it is, kind of apply with your own trading plan, with your own beliefs, okay? And realistically, this sort of advice kind of goes for everything. It's not just prop firms. It's basically any choice that you make in life. You kind of have to always do your research. You don't just hop in straight away, and make sure that it's something that you kind of agree with, okay? So as well as that, of course, even a big part that I missed out is looking up at these their reviews. Okay, that's very, very important. A company that has a lot of reviews, good reviews, of course they can fake them, but most of the time, usually it's not faked. If they have a lot of good reviews, then you know they're good. If they don't have a lot, then you know they're not good. At the end of the day, you're not really even losing much. Just go on YouTube. You know, a lot of people will even show you proof of payouts, stuff like that. And we're especially talking about the newer prop firms, because right now, I mean, there's like a new prop firm every single day. So if you don't want to do that research, okay, and the thing is with these newer prop firms, a lot of time they're going to give you even better deals and better rules and stuff like that, because they're kind of trying to compete with the bigger ones. But obviously there's a risk of it might be a complete scam. Okay, so you kind of have to weigh it out. Are you willing to do that research in order to get kind of a better deal, okay, better plan, or you just don't want to take that risk and just simply, you know, go with the bigger prop firm and there's peace of mind there. Okay, so at the end of the day, it kind of is up to you. Now, one of the things as well with prop firm trading is they kind of hop into the challenge. Okay, people just hop into the challenge and it can be really, really stressful. Okay, for the simple fact that you feel like, okay, this is not my account, kind of someone's watching my account. I have to prove something to some other people. There's just kind of that, basically your inner monkey in your mind just talking to you, and it can be too stressful for some people. And a lot of people end up losing many accounts. Okay, including myself. I believe that for the first time, maybe nearly my first 2 challenges, I pretty much lost. And that's probably lack of simply just understanding the challenge and just kind of the unfamiliarity of kind of, you know, trading for someone else, following someone else's rules, because you're not your own boss. And that's one of the major advantages for trading on your own. You're your own boss. You literally get to do whatever. There's no minimum trading days. There's no certain targets that you have to hit. There's kind of no certain leverage that you have to stick in the within the constraints of. All of that stuff, you're your own boss. And at the end of the day, I personally believe that that is probably the main advantage. 100% obviously the main advantage, but of course there's disadvantages to trading for on your own as well. Obviously you're going to be risking your own money. That's of course a huge disadvantage to it. Now, with prop firm trading, kind of, and this only applies to certain countries. Now, as you guys understand, certain countries with forex trading, okay, slash spread betting is what it's called in some countries, okay, it's tax free, which is brilliant. So when you're trading your own money, it's tax free. You don't have to get taxed, nothing like that. But when it's prop firm trading, okay, it's counted as taxable income. So you're going to be taxed there. And I believe that is going to be a deal breaker for a lot of people, especially living in, for example, the UK, Ireland, etc., like myself. So that's a deal breaker. You're going to have to be paying taxes upon your prop firm earnings as well. So for me, at the end of the day, what do I recommend you guys to do is start off with these prop firms, okay, because 99% of the people don't have enough capital, 6 figures, to be trading their own accounts realistically. Start off with them, make your profits, move over to eventually your own account. There's nothing stopping you trading your own account along with trading a prop firm. You kind of make profits there. Let's say you make 10K from the prop firm a month. You pay your taxes, blah, blah, whatever you have left. 50% goes into your own account and 50% for your own personal expenses or for your business, growth, whatever it is. So personally, that is the way I would approach it. But never get too comfortable, okay? Don't solely rely on just a prop firm, because you never know when they could disappear. You never know, something could happen. They could go bankrupt. You never know. So make sure that you're always building your own account on the side in case something goes wrong. So when something does go wrong, you're not just there stuck like a fish outside of water. And yeah, you'll be able to kind of, anything happens, you'll be able to always go to your own account and make profits on there instead. Okay, so with that being said, guys, I believe that kind of closes my opinion on prop firm trading versus trading for your own. So you guys kind of heard my opinions on it, my advantages, my disadvantages that I personally believe. And yeah, as I said, at the end of the day, look at the disadvantages, look at the advantages. There's nothing stopping you though from doing both at the same time. And prop firm trading, I believe, is a huge opportunity for a lot of people at this age, no matter where you're from, your financial status, how old you are. So it's definitely something to really consider. Just make sure you do your research. And yeah, happy successful trading to you all. With that being said, guys, I'll catch you guys on the next episode. Have a great day.